And we are live. Good morning, crypto warriors, and welcome back to the Gym into Crypto episode 482. Today is Friday, October 4th, and I am King, of course, here to bridge the gap between the community and crypto every day, Monday through Friday. Again, we are going to begin having these varying times. Again, this is definitely a 10-ish a day. I know, but again, our goal is at least do a show a day. I know we miss days sometimes, Monday through Friday. We try to do at least one show a day. But as Bitcoin Zay's traveling on his book tour, I'm handling stuff in LA. These times will continue to slide and vary. So we'll try to keep it around 10 a.m. every day. But again, if we come later or earlier, just have those post notifications on. So again, top stories of the day. A lot of craziness going on in the crypto world today. Coinbase Pro fees surged 233% for lower volume users. Well, fees dropped. Don't say I didn't tell you so a long time ago. Leaked tax filing. CEO of under fire Brazilian firm owns 25,000 Bitcoin. Tombe say Ethereum is useless and Bitcoin might moon in 2023. Issuing money is for governments, not private firms, says Tim Cook, Apple CEO. And last but not least, Fed official says digital central bank currency is inevitable. So again, a lot of crazy news today. I mean, you saw the title. The top story of the day, which we'll get into, is Coinbase. No broke boys allowed. If you poor, if you ain't got your money up, Coinbase not trying to hear it. I already told you they weren't for the community, but we'll get into it. Let me give some quick shout outs today. What's going on, Madam Crypto? What's going on, Shannon Allen, Tiffany from New York, Valdez Granville, Top Networkers Group. Let's see, everybody's coming in. Oh, and what's that you say? What's this silky, shiny, gold and black little scarf I'm wearing that does look so classy, as Shannon Allen pointed out? This is the Cryptic Coin scarf we were sent by Shannon Allen. Again, you know, he's one of the ambassadors over that project, or he's on the team of that project. I guess we're the ambassadors. But this is the Cryptic Coin scarf. You can see here it has the Cryptic Coin symbol in it on the gold and the black side, as well as a QR code. I'm not sure where this QR code even goes. Where does this go, Shannon? This might go to Shannon wallet. No, I'm sure it goes to the project's wallet. So I don't know. Somebody send some quick Bitcoin to this thing and let me send some cryptic coin to it and let me know where that thing goes. But again, this is some more of that good cryptic coin gear. Of course, we're ambassadors for them. It's an education coin as well as a privacy coin. So we try to push it to get more people to start using cryptocurrency. Of course, we used to give out Bitcoin every day. But trust me, we've been giving out a lot of Bitcoin here on this show, and it started getting a little crazy. So we had to slow that down just a little bit. Alrighty then. Other than that, let's start talking about these prices. I know that's the main thing a lot of people always want to hear about. Price hasn't really changed as much. We're back into that chop area again, but except in the 8,000 range to 12,000, 10,000, 12,000 range. But Bitcoin Day is at $8,173, down 0.02%. Ethereum at $177, up 2.32%. Litecoin is up $57 or up 1.97% at $57. XRP is at 25 cents still, but it went up about 4%. So you know they had that big drop. And Bitcoin Cash is at $223, up 1.7%. So mostly in the green today, but it's not saying much. I know because we just took that big discount a few days ago. So something to pay attention to. All right, what's going on, Mr. Gibson Sr.? See everybody else starting to load in. Keep on loading in, folks. All right. Top story of the day. As I just said, it started talking about already because, I saw a lot of the YouTubers and people on crypto Twitter talking about it. And it was funny to me because everyone's acting surprised about Coinbase. People are saying Coinbase has finally lost the community, or this would be the move where they lose the community. We told you all a long time ago Coinbase wasn't community. I knew Coinbase wasn't for the community in 2016 when they closed like 2 or 3 of my accounts out the blue numerous times over again without any explanation. They did the same to Bitcoin Zay after they closed mine. We tried using his for some stuff. They wouldn't give us an explanation. Essentially what it was is that if you were buying too much Bitcoin, or if you were at a certain threshold, they would just shut down accounts, because at the time they didn't want a lot of high volume people to come in and buy a lot of Bitcoin from them. Basically that they didn't know who wasn't in their little inner circle. So that's when we first saw the red flag. And this was back in 2016. We told people to stop using Coinbase. From 2016, when we started doing our shows in 2017, we told people about Uphold. When Binance came out, we pushed Binance. At a time, we were pushing Bittrex until they started going down the same path. But it looks like Coinbase Pro is in the news as fees surged 233% for lower volume users. Whale fees drop. You know what? To even keep the receipt on this, I think we have a video on our YouTube where Bitcoin Zay did the. I know we had it on our group for the paywall, but I think we released it for free as well. Where he said how to get off Coinbase. He has an entire video on that. So that's how long we've been pushing it. But major United States-based crypto exchange and wallet service provider Coinbase has announced that it will increase trading fees again on its professional platform, Coinbase Pro. It looks like starting on October 7th, so yeah, you have 3 or 4 days to adapt. Coinbase Pro will adopt a new fee structure that will cause its maker trading fees for low tier, $10,000 and below. Again, we need to key in on this because we always talk about the price of money and we need to start worrying about taxes and all that crazy stuff. A low tier is $10,000 and below. So if you're dealing with anything less than $10,000 in crypto, you don't need to worry about anything by and large for the most part. This does not include structuring where people will keep doing $9,000 deposit and withdrawals and trading on $9,000 over and over again. That's structuring. That's illegal. But if it's under $10,000, nothing to worry about. $10,000 and below, those fees are going to surge as high as 233%, according to the update posted on October 3rd. Following another surge in March of 2019, Coinbase Pro currently charges all accounts trading under $100,000. Even a better number. We've also said this number too. We said if you don't have 25 to 50K plus and you're actively trading that, you probably don't need to worry about taxes. Again, that's not professional advice, but that's that next tier. $100,000, not a lot of money, people. We keep trying to tell a lot of our clients who worry all the time, we're like, you only got 20K in there. Like, there's nothing to worry about. All accounts trading under $100,000 with a 0.15% maker fee and a 0.25% taker fee. After October 7th, those trades of 10,000 or lower will see maker and fees again increase by 233%. They're going to go up from 0.15% to 0.50%. That is a huge number. That is a 233% swing. Again, after October 7th, trades of $10,000 and lower will see maker fees increase by 233% from 0.15% to 0.50%, according to announcement. Taker fees within the tier will surge 100% from 0.25 to 0.50%. So you can see these breakdowns here. Again, 0 to 10K, the maker's 0.50%, the taker's 0.50. You go up to 100, it goes down from, for those who are listening, 0 to 10K, 10 to 50K, 50 to 100K, 100K to a million, 1 million to 10 million, 10 million to 50 million, 50 million to 100 million, 100 million to 300 million, 300 million to 500 million, 500 million to 1 billion, and 1 billion plus. Now, I will say these tiers make sense because Coinbase was the one that reported that we've talked about as well. Hey, they told the world we're getting $200 million. I think, again, I always get this wrong. I need to go back and look at the story so I can get it right. But they made an announcement. Brian Armstrong, the CEO, said we're getting $200 million either every week or every month. Again, I can't remember. If someone wants to look that up, let me know. But he already came out and said we're getting that $200 million every 4 weeks at least, right? Every month they're getting at least $200 million. So to have these breakdowns makes sense. And again, it's one of those business decisions we talk about with other businesses. It is unfair to the community. They are not for the community, clearly. However, from a business standpoint, it makes sense. Would I rather have a million accounts of everyone being less than $10,000, or maybe 90% less than 10,000, last 10%, sporadically sprinkled throughout the rest of the tiers, or would I rather have 10 or 15 accounts, each of them being over 200 million? From a business perspective, anyone out there is going to take the bigger one unless they are just seriously community driven. So again, it kind of makes sense. I get it. But the distribution on these makers and takers is incredible. I mean, you're looking at 0 to 10K, that 0.50% maker and taker, going to 100K to $1 million, which for a lot of working professionals is a bit more realistic, or 50K to 100K. We'll look at 50K to 100K. That's 0.15% maker, 0.25% taker. If you get past that 100K mark to $1 million, you get that 0.10% maker and 0.20% taker. I mean, these are huge differences. I mean, that's a 40% difference on the maker and a 30% difference on the taker, from having $9,000 to $100,000. And then again, once you get past $1 million, those maker fees all drop below 10% until they virtually disappear, or it looks to be $50 million, they disappear. And then the taker fees, they never really disappear, but they go down to 0.04% at $1 billion. And they go lower than 0.10% after $50 to $100 million. So again, it makes sense from a business perspective. If you only have $10,000 to play with, then yeah, they're about to charge you 0.50% on everything that you do. They're basically telling you to get off their platform. This isn't for you. And if you're one of those wealthier people, they're not going to charge you anything. They're happy to have their money, your money. And of course, for those institutions who these yields and these percentages make a lot of sense to, it's a reason why. Because they're doing fractional reserve banking. They're actually going to use your money to do a ton of other stuff Coinbase needs done, whether it's operationally or in the crypto space, actually buying, selling, and trading, or even going as far as margin in it, right? Because you are giving them a lot of money to play with. And right now, we don't have that technology where a big institution or anybody else can just log in and kind of see that dual screen through API we've talked about, where they can access their accounts without necessarily having the private keys, still seeing those screenshots. That technology isn't here yet. They're talking about it. Hopefully it's here by, I would say probably the beginning and middle of next year, but it is not here yet. So for those big organizations who love these maker and taker fees, just remember, Coinbase can get your money and just do whatever they want with it too. But again, this is no surprise to me. Like I said, we knew this back in 2016. This was the model Coinbase is going. BitPay has went this way. There's no reason to get mad. I know crypto Twitter and the crypto YouTubers are freaking out, but you had to see this coming. To me, if you didn't see this coming, you're not serious about the industry already, or I won't say you're not serious, but you don't understand how to analyze it. But it's not a surprise. And again, Coinbase, we've been saying this now for the last year or so. I think they stalled it out because of the bear market. But Coinbase is planning to take this thing, either IPO it or IEO it or whatever, but they're planning on selling a portion of their company, all right? It's the reason why they keep bringing in all these old Wall Street vanguards, and they're trying to make this more of an institutional company rather than just a crypto company for the community. No, they want to be an institutional crypto traditional bank if they can, a hybrid of both. So again, doesn't surprise me. But this is a big, I mean, you get a 3-day, you get a 3-day notice. What is that? 72 hours to 4 days, 96 hours. You're getting a 72 to 96 hour notice that all your fees you've been trading are about to go up 233%. That is insane. The good thing about the crypto space, though, this gives us an opportunity for self-regulation, because the reason why we don't see this in traditional banking or traditional sectors, because most of these things have laws against them. We're like, hey, you got to give your clients at least a month. There's like laws for that. You have to write to them. You have to email them. You have to call them at least a month and a half out before you make some type of major change. The crypto space, we don't have those rules. I think it's a good thing because you're seeing companies' true colors. But I don't know. I know I'm about to check these comments right now because I'm sure a lot of people have a lot to say about this. It is crazy. A top networkers group said crazy fees. Also, Tinder agreed. Sergeant Crypto, thank you. Sergeant Crypto said the 200 million was on a weekly basis. So Coinbase has already came out. And I remember we did those numbers live. Those numbers actually added up to the billions of money that actually poured into crypto, which is crazy when you break it down. But they're getting $200 million from institutions every week. So those tiers, as unfortunate as they are for the community, it does make sense for their business. If I'm getting in $200 million a week, I am sorry, mom and pop, $4,000, whatever. I don't have time to support you. I'm just going to cancel your account. I don't have time to talk to you. That's the way to operate. It sucks for the community again, but this is what it is. Also, Tinder said, I didn't open a Binance US account because they didn't offer many pairs, but after this Coinbase news, I would take my business to Binance US. I mean, yeah, Binance, Gemini is going to get some of that. I know Uphold's doing some new things with it. So they're about to push all these low tier people in every direction. But again, when you're getting $200 million a week, I'm sure they're feeling pretty good about it, and they just don't care. It is what it is. But it is a top group. Yeah, Valdez, Granville basically gave the shrugging shoulders. That's what it is. Madam Crypto said extortion at its finest. Listen, you got to pay to play. We've been telling people for years now that this industry was going to turn into something that was only for the wealthy. We're seeing it happen already where they're trying to create rules and regulations or just FUD articles to scare normal people out of it and to only keep organizations and institutions in it. To me, that says we've hit the jackpot, people. We're in the right place still. All right. Next up, leaked tax filings. CEO of under fire Brazilian firm owns 25,000 Bitcoin. This is a great story to illustrate exit scams as we talk about them almost every week here on the show because they are a prevalent part of the space, but it looks like the CEO of Brazilian cryptocurrency firm Grupo Bitcoin Banco, I'm assuming from my limited language, what's the word? Heuristics. I'm going to assume that's the the bank group of Bitcoin or something like that. But they have claimed that 25,000 Bitcoins, a staggering $209 million as of press time, on a tax filing, while also saying his firm is unable to pay out customer firms as a result of a hack. That is right. In plain speak, the CEO of a Bitcoin exchange / bank basically said that he can't pay customer funds because he's been hacked, but he's claiming 25,000 Bitcoins on a tax filing. You can't make this stuff up, people. This is crazy. The tax document was shared with Cointelegraph by the individual close to Brazil's tax authorities, so I'm assuming they probably wanted this to leak because they're like, hey, this dude is literally about to get away with highway robbery. The Department of the Federal Revenue, RFB, who asked to remain anonymous for security reasons. Again, I'm just assuming off the strength of how most governments operate, a government employee giving a news media organization someone's personal information about their taxes seems highly illegal to me, which is probably why they want to remain anonymous. According to the document, the exchange CEO Claudio Oliveira claimed his crypto holdings in a 2018 filing with the RFB. Although the document is genuine, it is not possible to know if the numbers reported are accurate or the most current due to tax filings in Brazil being self-reported. I will agree with that. It's kind of weird. If you could self-report it, I don't see him doing an extra scam and then saying I have all the Bitcoin on a sheet of paper. It doesn't make a lot of sense to me. But maybe he did report it because this person actually did, and he plans to spend the money. He's like, I don't want the government being like, where did you get $209,000 or $1 million from? He's like, I can care less about these pawns I flipped upside down their head for all their money. I just don't want the government coming. But it looks like despite the fact that the tax filing is for Oliveira's personal funds, legal experts told Cointelegraph that Brazilian law could potentially demand the CEO's personal assets to cover the firm's debt. Oliveira's Bitcoin is more likely to be seized if his company to have found to engage in fraud and was not the victim of a hack, as the company's representative have stated. Again, this firm is under investigation right now amidst these recent legal troubles and an ongoing police investigation activities. It looks like in May, Grupo Bitcoin Banco claimed that it had become embroiled in a security breach that saw some customers double the balances of their accounts and withdraw money that did not exist, as Cointelegraph Brazil reported. The cost of the purported hack could amount to 50 million Brazilian reals, $13 million. I mean, just as being in business myself and being a business owner, this is one of those things where the right thing to do, regardless, especially if you have $209 million, is to pay back this $13 million. Grupo Bitcoin Banco has always maintained it was the victim of a hack. The firm has yet to offer any evidence in support of that claim. On June 6, a judge from the state of Paraná ordered the firm to provide evidence of the hack in its defense against a former client's lawsuit. They never share evidence of the hack with the court. In July 2nd, the firm settled with the former client for an undisclosed amount. So again, as I read into this, it looks like an exit scale. Like, this is a classic exit scale, allegedly, because who knows if it actually happened. But yeah, if a crypto group owes people money and they claim they've been hacked, but the CEO has a lot of crypto and he's not giving any of it back or doing anything about it, it was an exit scam, and it looks like they may possibly be getting away with it as of now until this light has been shined on Cointelegraph. And again, shout out to Cointelegraph for this article, as well as the Brazilian authority who provided it, if it's true, because this is self-regulation, people. This is self-regulation. We don't need, I just talked about the bank laws and all that. It's like, you don't need all these laws. You need good actors in the industry to say something's not right here. Let me try to stop this from happening. You got the media on the people in the community side as well, and they're helping. So to me, this is what self-regulation looks like. It looks like, again, that the military police officers has already raided their offices back on August 20th. And I'm not sure what was found from there. They're not saying that anything was found. They just said, the legal representatives just say that the authorities used excessive force. They probably did. Somebody that's working for the military police, grandma called them and was like, I got beat by some Bitcoin scam for $500,000. They probably kicked in the door and broke some computers. So again, this is crazy that this is happening. This 25,000 Bitcoins that was filed with the RFB. They're listed under the column for claiming goods and dues. So again, this guy is trying to keep all of this money if this is true. You can read more into this article on Cointelegraph. It's a pretty long article, but it does go in depth as far as everything that's going on with this case. Pretty interesting case. And if it's true, if this guy does have this $209 million and some of his due back to the people, expect this in the Bitcoin movie, in the real crypto movie. Expect this in there. Let's see. Also, Tinder said, I think BitTrue is in the gray area when it comes to U.S. regulations. Most people actually are. It's about how much money you're going to pay to the U.S. government to stay in that gray area but be safe. Also, Tinder said Binance US has more liquidity than Gemini already. Well, yeah, Binance has more liquidity than most because their exchange is seeding better than most others. But the Gemini twins are wealthy. You got to remember that. I mean, they're wealthy. They're wealthy kids. They went to Harvard. I'm sure they have a lot of wealthy friends too. So as far as liquidity, with their name being on the line, I trust them for liquidity in general. I don't think they'll take 25,000 Bitcoin on their tax return and let their exchange sink. I think it's way too personal for them. I think it's something we're going down on the exchange. They need it to be liquid. They will pull their personal funds. You got to remember, they may be, if not some of, the first crypto billionaires out there at one point in time. So, yeah, I'm with you on the exchange, but they have the money for it as well. And I think they bank on that too when people use it. Sergeant Crypto said, forget proof of keys. We need proof of funds. Listen, it is crazy. The fractional reserve banking is happening in crypto as well. And this is why we want to push for Bitcoin decentralization, transparency. We don't need you to fill out a tax return. We don't need you to tell us anything. We're just going to go online. We're going to look it up ourselves. That is the beautiful part about the Bitcoin blockchain. Lisa Martin said, hey guys, are there 2 meetups this weekend in Chicago? Is there a fee? Could you give me a location? Well, hello, Lisa. Today it is just me, so I'm not sure if you're watching or listening, but hit up Bitcoin Zay on Twitter, and he'll give you all that information as far as Chicago. That's not my deal, so he has all the info on that. PFC Wills, what's going on, Trek? Yeah, Gemini is advertising everywhere. It's getting crazy with it. All right, here's another interesting article. Tone Bay says Ethereum is useless and Bitcoin might moon in 2023. Now, to be fair, I'm sure that Cointelegraph is like, hey, we need an article, Tone. What you got for us? All right. And he was like, I got you something to click on real quick. For those who don't know what Tone Vase is, he's infamous on YouTube and Twitter and all that for a lot of his TA, his technical analysis. That's all the graphs and charts where you can try to predict the price of Bitcoin or the price of any other crypto, or not even the price, where the market may go based on some of these charts and graphs. You start learning about RSI models, things being overbought, undersold, overbought, that good stuff. You learn about this with TA. However, if you heard me talk about it, you know that I like a healthy mix of technical analysis as well as fundamental analysis. And to be honest, from what I've learned in the Bitcoin and crypto space as of now, I would say for the most part, fundamental analysis to me is even more important, because when you have something so novel and so new and is being and it can be manipulated by different governments or people and all that, the TA really don't matter. The TA can tell you, you know, everything's going to go this way 110%. A million different people can have it right. But again, if we wake up on a Friday morning or Monday morning or Wednesday night or wherever, and some regular says, all right, Bitcoin is now illegal, or it's legal in these places, or this is what we're going to use it for, positive or negative, it would change the entire outcome of all that TA, right? At least that's how I feel about it. But again, Tone Vase, you can check him out if you do like some of his TA. He has been right on a lot of times, so I'm not going to act like he's always wrong or anything like this. But this is just a more TA article in general where I just wanted to kind of talk about, because, you know, he's saying Bitcoin might moon in 2023. Again, that's one of those things where everyone has a new date every year, right? Go back to his videos 2 years ago and see what he said. You know what I mean? Go back a year ago. And then he's saying Ethereum is useless. Again, it's one of those things where we're flip-flopping and we're picking sides 24/7. If you want to know why, he has some of his reasoning in this article. Again, it's a pretty long interview. He's saying he thinks the price of Bitcoin will be around $7,500 to $8,000 at the year end, but he said these year-end predictions only have two outcomes: being praised for being a good guess or being made fun of for being wrong. But that's what I'm thinking about at the moment. Tomorrow it might change. So again, I'm not giving him a hard time because even here he admits it. He's like, yeah, these are predictions. We're having fun with it, whatever. But some people do take this very serious, which is why I had to talk about TA when some people take it so serious they think this is the only way to determine the outcome of the price or the market in general. So I think it's worth noting that not only is that not true, but no matter how smart the TA person is doing it or how much experience they have, any of that, we always talk about these black swan events. It doesn't matter, especially at a time when regulators don't even know what they're doing, and people are scared to even jump into the market. So cool article, cool story. I would say check it out if you do like looking at the numbers all day and you kind of worry about them. You want to know what's going to happen. My point is, at the end of the day, crypto is going up. Bitcoin is going up. It's a technology that works. And to me, that's enough as far as my investment strategy in it. And again, he talked about Ethereum as well, saying Ethereum is going to go down. You can see here he's talking about backed as well. He goes into altcoins. He goes into everything. So again, pretty cool article to see. If you have some time this weekend, it's by Coinbase. Go ahead and check it out. It's on Cointelegraph. All right. Next contentious article, huh? Issuing money is for governments, not private firms, says Apple CEO. All right. This is where I got calling some people out. And again, I know what the response is going to be. People are going to say, well, hey, you don't have $1 billion. You're not leading a $1 billion plus company. You haven't done these things. You can't be that smart. But here's the deal. These people are not that smart. They're very good at what they're doing. They're very good at their niche. It's kind of like the Fortnite thing right now, the Fortnite video game. I know a lot of people heard about it. They just had the Fortnite tournament where some kid won like $4 million, right? I think he was 16 years old or 15 years old. He has $4 million. Does that make him smarter than all the people out there that don't have $4 million yet, right? Not really. He's just really good at Fortnite and playing that video game. And I say that because when you start talking about geopolitics and you've been sitting behind a computer learning technology your entire life, because to be the CEO of a big tech company, the biggest tech company on the planet, you have to sit in front of a computer your entire life. You probably don't know that much about geopolitics. In fact, I would even dare to say he probably didn't even start learning about geopolitics until he entered the C-suite at Apple, because until then, there's no reason to know about it. You're still coding away, you're still developing, or you're leading teams. You're doing things that involve technology. Now, once you're at the C-suite level and you get boosted to that executive position of CEO, then yeah, you need to know how your multi-billion, if not trillion-dollar company, almost trillion-dollar company, I don't know where it's at today. But yeah, at this time, you do need to know how your company fits into the world of geopolitics. And with that, he knows presidents, he knows governments, he knows all these people. So for him to come out and say, issuing money is for governments, not private firms, it is a blatant lie and biased statement by him. Again, this is Apple CEO Tim Cook, who's spoken out about whether, and the reason why he's speaking out about whether his company will launch a cryptocurrency, and his answer was a firm no. This was done in an interview with Les Echos newspaper. Cook argued that private companies shouldn't be competing with states on monetary control, stating, "No, I deeply believe that money must remain in the hands of states. I am not comfortable with the idea that a private group creates a competing currency. A private company does not have to seek to gain power in this way." Again, this is Tim Cook, the CEO of one of the biggest companies on the planet. As my boy said from Casino, Robert De Niro, I can't think of his name in Casino. I should know, I actually wrote about this before. What was Robert De Niro's name in Casino? Somebody throw it at me. But anyway, Ace. It was Ace Rothstein. So Ace in Casino, basically one of the slot machines had been broken, or either that or somebody was scamming it. But like 3 people won jackpots back to back. He went down to the floor manager of those slot machines and he said, "You're either incompetent or you're in on it." So Tim Cook, I'm going to say to you, you're either incompetent or you're in on it, because we already know there is a private group that makes all the money. It's called the Federal Reserve. Like, what do you mean? I believe it remains in the hands of the states. It's never been, well, I won't say never, but the last 100 years, we talked about this already. It hasn't been in the role of the states. It's been in the role of a private company started by 5 people on Jekyll Island. So the fact that the CEO of the biggest company on the world with the most market share, liquidity, money, all that good stuff will say an ignorant statement like this tells me he's either incompetent or he's in on it. Now, I know better. He's definitely in on it. And as far as them doing an Apple Pay, I'll say this. if the market makes sense, Apple will create their own digital currency, because all he would have to say was, well, if the information I had at the time, then I thought it was no, but with this new information, yeah, we're gonna go ahead and make an Apple currency. So let's just put that in the back of our heads. But not only that, they kind of already did it. This thing called Apple Pay, they stole that technology from Bitcoin, people. Where do you think Apple Pay came from, where you can just be on your phone and pay out the thing and all that? That came out, in fact, let me actually pull it up. Boom. Here it is on the right here. Apple Pay initial release was in 2014. It's using very similar, if not some of the same technology as Bitcoin, the Bitcoin blockchain uses. And that is because they stole it after it came out. So, and it's not just Apple Pay either. All the different cell phone and telecommunication stores and all that who have their own little pay things, they all stole that idea from Bitcoin. Bitcoin was the first one to do a digital currency. Remember that. No one else had the idea of just having these in-house wallets and all these things. So, again, you're either incompetent, Tim, or you're in on it. And I'm smart enough to know that you're more than likely in on it. And I get why, too. You have a pretty big company to protect. And you're like, what do you need me to say? Yeah, we'll never do it. It should be for governments. I get it. But again, don't insult our intelligence. Cook further stressed that the control of money should lie with elected governments, saying money, like defense, must remain in the hands of the states. It is at the heart of the mission. We elect our representatives to assume government responsibilities. Companies are not elected. They do not have to go on this ground. Well, governments aren't really elected either. We do our due diligence on that, but we won't get into it. Not only that, this sounds like a weak person. This sounds like a weak person. And if you ever heard Tim Cook talk, I mean, he is very soft-spoken. He has those attributes of a weak person. And the reason why I say is because whenever someone wants someone else to do everything else for them, to me, that's a sign of weakness. So you saying money, like defense, must remain in the hands of states. Why must defense remain in the hands of states? I'm glad we have a national military and CIA, FBI, and all these people to protect us, so they say, right? Though history shows they actually haven't a lot of times because they're the aggressor. But let's say that we do have all these things. I love that we have them. But one of the main reasons why people don't attack the United States, not only those two oceans I always talk about, is because of our militias and all our gun owners. I think the numbers is something crazy to like 13.3 million Americans have guns or are in part of militias, state militias around the United States. That's not the hands of the state. That's the hand of people in the community forming these groups or buying these weapons to ensure we have a bunch of weapons. So if someone were to invade us, it wouldn't just be our military that would fight. There would be another 13 million plus Americans who have weapons. So again, I think that's kind of a weak point in general. I know that doesn't have a lot to do with cryptocurrency, but it does kind of have a lot to do with what he's saying in the totality. Again, he's either in on it or he's incompetent. I'm going to go ahead and say he's in on it. This article goes a little bit more in detail about who Apple Pay was probably talking about, which we know who they're talking about. Facebook, clearly. That's the only other company out there that's trying to create a cryptocurrency, on a global scale. So this is a shot at not only Facebook, but any other company who wants to do it. And again, he's saying this because they basically already did it with Apple Pay. And of course, he's trying to protect his interests with the American government. But they're lies. Let's see. What's going on, Jamal J? Jamal J said, King, you better keep your eye on Tommy Egan. Hilarious. You saw the photo. Yes. I can't say it publicly. NDAs have been signed. But if you know what he's talking about, you can look at the pictures of some of the artwork for some big TV shows are out. Some of them may possibly be me actually with a little CGI or wherever the little computer stuff is to make it look like another character. So yes, that's real life. Cryptonomics said actually ERC20 tokens are useless, which would make Tone Vay's statement somewhat right. Oh, all right, Cryptonomics, I see you. Listen, people are going to come after you with a statement like that. Currently, many of them are useless. I'm with you, but it's a growing technology. I mean, just because they're useless today, will they be useless a year from now after they've been developed? Who knows, right? Ray Mata said, I watched the video where it says true technical analysis includes and depends on fundamental analysis. Thank you for that. I have not seen that video, but if you had that link, let me know. It's something I've told a lot of people in the past. A lot of people don't like to hear it, and it's cool. I can care less. But I will say when I was aggressively trading, and once upon a time, fundamental analysis was helping me more than technical analysis. Not to say I wasn't looking at it or using it. I definitely was, and it came in handy many times as well. But fundamental analysis is where I was making a lot of bank because, and think about it, that's why all these projects try to do all this marketing, people. All that marketing is fundamental analysis. We have a big update coming out on November 22nd. It's going to be crazy. We have this big partnership with Google. We have this big partnership with Amazon, even though they're just like on Amazon's cloud services, right? But they say they have this big partnership. That's all fundamental analysis. The team itself, who leads the team, what projects they've done in the past, all fundamental analysis. So to me, I lean heavily on it, not just in crypto, but in general. Jason Nelson, Dragon Wolf Tech, I've never seen you on, so welcome. Hello to you. Make sure you smash that like and share button. That's right. Sergeant Crypto said, sounds like he got the tap on the shoulder. Like, if you're thinking about it, you better stop before you start. Hilarious. I read that the wrong way you said it. But yeah, Sergeant Crypto said, it looks like Tim Cook got that tap on the shoulder where they was like, hey, are you even thinking about creating your own cryptocurrency? Like, cancel that out. I agree with you as well. Will, what's up? Mr. Gibson Sr. said he has to say that. Like you said, he's friends with the people making the money. If he just mentions crypto in a good light, people will flock to it. Oh, listen, if Tim Cook were to start mentioning crypto and say, you know, we're about to have Bitcoin wallets included on our phones when they're coming out, he might go missing tomorrow, okay? We know that as well. What's going on, Dexter Hand Sr. from the ATL? Too much truth. I know it's crazy, people. All right, and last but not least, to end on a great news article and to actually contradict everything Tim Cook, the CEO of Apple, just said and basically prove my point, a Fed official says digital central bank currency is inevitable. And again, central bank being the Federal Reserve, being a private company owned by private citizens that we probably have no clue who they are. And again, the Federal Reserve hasn't been audited in I don't know how long, and they just printed off $275 billion. Can you imagine Bitcoin just did that? You wake up tomorrow morning and Bitcoin says, you know what? Forget that 21 million number we told you. We actually just made 275 new Bitcoins. That would be the thing to kill the project, not anything else. But it looks like Philadelphia Federal Reserve Bank President Patrick Harker said it's inevitable for the central banks, including the U.S. Federal Reserve, to start issuing digital currency. He was speaking at a community banking conference in St. Louis. Harker argued that the U.S. should not be the first big country to issue a national coin because technology is still maturing and the U.S. dollar remains the world's reserve currency, according to a Reuters report. I agree with that. It's something we talked about. I think that's what we're seeing now when we see all these other countries. We talk about Venezuela, trying all these different crypto projects. The U.S. actually wants them to do it. As much as we act like we hate, Iran trying to do this, Russia, Venezuela, we're happy because we're like, yes, you test it out in your country, and then we'll figure out what you did wrong and we'll do it right. So I agree with that. He said it is inevitable. This is a quote from him. It is inevitable. I think it is better for us to start getting our hands around it, end quote. The Federal Reserve official said, answering a question about the Fed's decision to create its own real-time payment systems called FedNow. This is how far they want you to be away from it. They don't even want to associate with crypto. The Fed is calling it a real-time payment system called the FedNow. Whatever. Harker said, I am looking at the next 5 years after that. What comes next? I do think it's something around digital currency. So again, this is a great news article because it is it's not even a base hit. This is a double, people. We're on second base with this, maybe even round in the third if we can get a good steal. And I say that because we now have central bankers going back and forth with each other. We talked about this a little bit on Wall Street, but it's starting to proliferate. I think we're going to continue to see this more, where bankers are going to come out publicly at these conferences, at these talks, at these community town hall meetings, and they're going to start speaking their mind like, look, I don't want to be the guy on the record that kept pushing back on crypto. I think we need to have it here. And that's what these people are doing. When you're a Federal Reserve Bank president and you're going against what the Federal Reserve is putting out as far as messaging, because this is going against it, unless they're trying to prime us up for that FedNow coin, then you're creating a dissension among the ranks. And again, I think this is a good thing. I think it's going to continue to happen. I think it has to happen because if not, again, when crypto is adopted or these national currencies get adopted, these CBDCs, central bank digital currencies get adopted, the smaller banks will suffer. Trust me on that. The smaller banks in smaller towns and smaller cities, and I know Philadelphia is a big city, but not really a big city, if you know what I mean. We're talking about LA, New York, Chicago, and those type of things, San Francisco. Philadelphia is a big city, so I want to lump them in as well. But when you start thinking about smaller cities that have these Federal Reserve Bank presidents, they're going to have to save their own skin, because if not, they're going to be in their city looking like the dummy. These other New York's, LA, Chicago's, even Philadelphia, they could probably get away with it because there's just so many people, but there's so many customers. Someone's going to come, to the door. But if you're in a small business or a smaller bank or smaller federal bank, and you're saying no to Bitcoin and crypto, and then it comes the next day because the head honchos, the top of the Federal Reserve Bank, say, yeah, we're going to get it and everybody's going to use it. And you've been telling your customers no year after year after year, and then you have it one day, it's a very bad look for you as a bank president and your bank in general. So I think some of these bank presidents at some of these mid-sized cities or smaller cities are going to try to distance themselves from the messaging right now that this thing is never going to happen, and start getting people ready like, yeah, it's probably going to happen. And I'm not going to be the idiot telling everybody no when this thing comes down the pipe. So something to consider. Pretty cool. And of course, I had it on the chat cam the whole time as this article was up, but you didn't miss anything but some words. All right, last few comments. Let's see. I think I got everyone for the most part. Again, very interesting day in crypto. I'm expecting a lot of stuff to happen over this weekend and going into next week. People, we're in a Q4 right now, and it's now or never. We'll see what happens to this price of Bitcoin. Here we go. Last comment of the day is Ray Mata. Let's see. Ray Mata said no private coin will be used by all countries because Russia won't follow the authority of Libra. The United States will not follow the rules and authority of any monetary coin from Iran, and so on and so on. Yeah, when it comes to the big countries, if we do a private coin or a central bank digital currency, any of those things, I think it's going to be what we're seeing right now. It's just going to be even less cash, people. I think we are going to see because I don't even know why we're doing this central bank digital currency. All they really need to do is go to every bank on the back end and hook it up to one of their own centralized blockchains, wherever, with the same technology, cut, copy, and paste, and they can have this thing rolling. So the fact that they're trying to make it seem like they're about to push out a totally new product, I think that's just marketing by all these governments. It's a business still. There's no need to push out a bunch of new products. You literally just do everything on the back end, and then the next day everybody wake up there. We're just like, all right, there's not as much cash anymore, people. And everything that's in your bank accounts right now, that's going to be known as CBDCs for now. It's not just regular cash in your bank account. So we'll see what happens. Other than that, that is a show for today. Have a happy Friday. Thanks for watching. As always, make sure you smash that like and share. And of course, check us out on iTunes Podcasts, Google Play Music, Spotify, and iHeartRadio. Have a happy Friday and a great weekend. We'll see you all next week. Cheers.